Welcome to Financial Planning Explained. I'm your host, Mike Menninger, certified financial planner, owner and founder of Menninger and Associates Financial Planning. I'm pleased to have as my guest today, Brandon Thor, who's the CEO and owner, I guess, of Thor Metals Group. Are you the owner as well?
Yeah, we're a corporation, but I'm the CEO and I have a partner. So it's just me and him. We run the show there.
Well, anyway, welcome, Brandon. Thank you very much for joining. So the purpose of today, this episode, and it's probably going to carry into more than one. I spoke to Brandon a couple weeks ago, and we were talking about what he does in gold as a whole. And as we all know, gold is an investment. And, you figure there's the three basic investments for people who are investing in their mutual funds. Their 401k and everything else. You got stocks, bonds, and cash. But then there are other asset classes that are, I don't want to say unique, but separate of that. And you can go real estate and commodities. And commodities, the most common commodity is gold. And we all know that gold dates back thousands of years to the Egyptians and whomever, that the kings would hold on to the gold and someone would try to capture and it would take the gold. So gold clearly has a value, but what I'd like to be able to do is take this and really educate more and dive in deep into gold. So Brandon, thank you very much for joining me today.
Thank you for having me, Mike. I really appreciate it.
So tell me about what you guys do. What does your company do?
Thor Metals Group, that's my baby. I was in the industry, and I'll go into that in a second, but we sell physical gold, silver, platinum, and palladium. So, actual coins and bars. Our clients, they either will use, money or funds they have in a checking account or a savings account, in which case they'll send a wire and we'll just ship them the physical metal, or they can use an IRA or 401k and actually acquire the physical asset within the system. Now, with that, we have to just ship it to a depository, where the government knows where it is until they get out of the system. But that's what we do, is just sell the physical stuff.
Well, that's interesting when you reference the gold IRA, because sometime during the course of this, I want to talk about it because I have mixed opinions on it, just so you know. And I think, we talked about it a couple years ago, or a couple weeks ago when we were chatting, the costs associated with that. So I'll leave that aside. So talk to me about the different ways, and we'll start with gold. You said silver, gold, platinum, but I don't hear much about palladium. Can you tell me a little bit about that?
Yeah, platinum and palladium are a bit more, I would like, maybe the word is not completely correct, but exotic metals, I guess, in the sense that, gold and silver are old faithful. You can really chart your course with it and people really understand those. Platinum and palladium, they have their own niche markets. And the big thing with platinum and palladium is actually industrial. Okay, so platinum and palladium are used in catalytic converters. Platinum is used in diesel-based catalytic converters. Palladium is used in petrol, gasoline-based catalytic converters. So that's the difference there. And what you see is, when these green initiatives really started to take hold, if you remember palladium shooting up past $3,000 a couple of years ago, or maybe it was like 5-6 years ago at this point. But that was basically a lot of those environmental green initiatives. A lot of these diesel trucks were being decommissioned. And so a lot of, clean burning or gasoline based trucks were coming on the road. And so the demand market for palladium just skyrocketed. And of course, platinum, it sunk. Now, right now, you're seeing a massive demand market for platinum, because here's the thing also. Platinum is used in every missile ever launched. There's a catalytic converter in that missile. So as we see all these military conflicts, there's a big demand for platinum from a military perspective.
I didn't know that. So let's talk about gold now. We all know of gold as it's watches and jewelry. Okay. But gold also has a industrial use, doesn't it?
And here's the thing, with the industrial markets, silver would probably be where we would want to target our conversation, because that would be something where if the demand in the industrial market ratcheted up, then you'd see a nice real rise in the investment. With gold, the industrial uses for gold, if that demand ratcheted up, they would just simply find alternatives because gold is, is very valuable, very expensive in comparison to silver. So, as far as analyzing something as an investment with silver, I think you do put a good amount of weight on its industrial use. With gold, you really don't, because with gold, even its industrial uses, again, like I said, if that demand, went really high, then they would just simply find an alternative. They wouldn't just, spend a lot more on gold, and it would become more expensive, if that makes any sense.
Yeah, well, so now I guess I don't fully understand the value of gold. Why is there such a demand on gold? I mean, because as far as I'm concerned, you can gold plate my jewelry, you can paint it gold. Why is there such a demand on gold? It used to be it supported the reserve currency, but it doesn't anymore. So, what is the real demand for gold?
Well, so the real demand for gold goes back to what you introduced gold as in my kind of initial cringe, which is, gold is an investment, and that's not up for debate. I know that everybody says that and whatever, but I would posit that gold is actually a store of wealth, a form of currency masquerading as an investment. And if you look at it in that manner, then it makes sense. Gold's been around for 5,000 years, and it's always been just an internal measuring stick of value because you can't print it. There's a stable supply. So, as we started to evolve as a society and moved away from, barter and exchange, where you trade a pelt of fur for a can of beans, gold was just a much more efficient way to just have that medium of exchange. And so, and then of course the fact that you can't print it, you can't manipulate it, those were really good features to have in a currency. Now, of course, we invest in it, and that's why we call it an investment. And it's internally valued, so it behaves like an investment. But I really believe it's a form of just money or currency, like it always has been historically, and it just masquerades as an investment simply because it's internally valued versus the dollar, which is externally valued, meaning that the way you see the value of the dollar is by seeing, a can of ketchup or, at the store, and then what it costs a month later.
So, I think I remember you telling me there was like a 10 or a 20-year period that the value of gold did not change, yet you look at the last 2 years and it's up about 80%. Why is there such a volatility in the value of gold going up or remaining the same?
So listen, it's a really good question, Michael. And in the 80s and 90s, gold never moved. It started 1981 at $300 and it ended 1999 at $297. Okay. And the reason is simply because when you're an investor, you have your buffet of investments and you choose one or the other. In the 80s and 90s, we were in a growth-based economy. All the baby boomers are in the workforce. We have a good debt ceiling we never went above. So it was king dollar. We had a really, a robust economy. And so you want to invest in that growth, which is investing in the stock market, right? The companies that make up the country. Since the year 2000, all the baby boomers have now retired, the biggest mass exodus from the workforce in United States history, and we've started borrowing. So now we're in a debt-based economy, and in a debt-based economy, you want to invest in assets that protect you against the consequences of debt. Gold being, the main one that does that. So that's why, in a growth-based economy, gold's not going to do anything. It's more like apocalyptic insurance. But in a debt-based economy, gold's going to really be in demand and do what you've seen it do the last 2 years.
It's funny you say that because it reminds me of the dollar in that whenever there is a world conflict or a world fear or anything else, there tends to be a race to the dollar, but there also tends to be a race to buy gold.
Yeah.
Has that happened in the last 2 years? Is that the Russian conflict? Is it, Ukraine, the Middle East? Is that a lot of the driver, or is it the debt? What's driving it in the last couple of years?
Sure. What's driving it the last couple of years is simply the fact that, we have printed a ton of money and amassed a ton of debt. And like I said, if you want to look at gold through the lens that I posited a few moments ago, which is as a form of currency, as a store of wealth, well, guess what? when you quadruple the supply of dollars, you diminish the actual value of the dollar. When you're $37 trillion in debt and climbing, and your debt servicing cost is increasing, as interest rates rise, then, you as the borrower, or the United States government as the borrower, their ability to service that debt diminishes, right? And if you look at a dollar, it says federal note. So it's a loan. So basically, what you're putting your wealth in dollars is loans backed by the United States government, which is a $37 trillion debtor. And so as we've seen the risk profile of that debtor, climb, and as we've seen, the supply of those loans quadruple, well, guess what? Gold looks a lot more appealing, and consequently, there's going to be a demand, and it's going to go up.
So everything that you just said there is not changing anytime soon. And of course, you're being a precious metal dealer, you believe that it will continue to go up, just like you talk to real estate realtors. Housing only goes up. But, do you think this continues?
Yeah, I think that this is literally, if this is a basketball game, we are at the national anthem. I mean, because here's the thing. I was the boy that cried wolf for about 4 or 5 years, in the sense that I had bulletproof logic as to why you should invest in gold, a very good pitch as to, hey, listen, the dollar, debt, same things I just said. But yet gold was not performing indicative of my bulletproof logic. But finally, that suppression has released a bit, because the demand market has overwhelmed Wall Street or big finance, or, the US government's ability to actually, suppress the price. And so, now that that's been overwhelmed, I don't see that foot coming off the gas. So, I absolutely not only see it continuing, I see it amplifying.
So historically, and I haven't looked at it lately, but gold and silver ran together. Where gold was it 17 times or 40 times? I forget.
You got it. Yeah. Gold would oscillate between about 17 to 30 times, like right around there, between 17 to 30, meaning if you took, the price of gold divided by a number from 17 to 30, you'd get the price of silver. And now it's completely gone off or jumped the shark. It's closer to 100 to 1 now. So yeah, I mean, that ratio, which has stayed consistent, and we're talking, for thousands of years, not for 20, 30 years, has in the last 15 years completely just, gone way, it's jumped the shark, I guess, is what I'm struggling to say.
So looking at it objectively, is that suggests either of two things. Either gold is overpriced or silver is underpriced, or supposedly a third thing, that they're no longer connected. What's happening?
Silver's underpriced. Okay. And I want to not muddy the waters and make this too complicated, but just think about these major concepts, which is, okay, I spoke about the ability of big finance or the US government to suppress or manipulate the price of precious metals. Okay. Now they're not able to manipulate the organic demand for them. They're not able to go and knock on your door, Michael, or my door, and say, hey, you don't want to buy gold and silver, but they are able to manipulate the paper market, which I know we're going to get into, in a bit. So that manipulation is done via these contracts. Now, these contracts are supposed to be backed by physical metal on a one-to-one basis. It's not like fractional banking. But we found that the emperor has no clothes, and they've been taking advantage of the fact that these contracts generally are traded on an institutional level and are never traded in. They're never called for the actual asset. Like they're
Right.
settled in cash. And so since silver is so cheap, and since, $300 million in silver, 500 million, these big trades, nobody's going to, ask for that silver, and they know that. It's just a lot easier to manipulate. And so that's what you've seen. JP Morgan is a huge perpetrator of this. And that's why I believe you've really seen silver, have the ability to be suppressed a lot more than gold.
Interesting. And silver's been around almost as long as gold, because they were using silver back in several thousand years ago too, weren't they?
Yeah, silver has been around just as long, and it served that same purpose, as currency, just the same as gold. Now, silver also has a lot of industrial use and solar paneling and things of that nature that, make it appealing as well. But certainly it's the same, macro function as a store of wealth, form of currency.
Perfect. Well, you know what? We're up against a break. Perfect timing. So stay tuned. We'll be back with you in just a few moments.
Do you keep up regularly with your investments? Where exactly are your hard-earned dollars going? Are you financially prepared for an emergency?
I'm Mike Menninger, founder of Menninger and Associates Financial Planning. We believe that education and knowledge are powerful, and we want our clients to understand why we are making the recommendations that we make. It's your money, and you deserve to know where it's going, because it's not how much you make, it's how much you keep. So call us today to discuss your financial concerns. Welcome back to Financial Planning Explained. I continue here with Brandon Thor, and we're talking, about gold and silver. So what I'd like to do is talk about how do you buy it? Okay. So Brandon, I want to buy gold. How do I buy gold? And there's a lot of ways to do it, isn't there?
Yeah, absolutely. So there's various ways to get exposed to the quote unquote precious metals market. All right. You can acquire mining stocks, which is you can invest in the companies that actually, pull the metal out of the ground and produce the metal. You can invest in what are known as, ETFs, exchange traded funds. So that would be, getting exposed to the price of gold, but not actually having physical ownership of it. And then you can invest, of course, in the asset itself. So this would be coins and bars that you would hold as your possession. It's all dependent on what you're looking to do and what your time horizon is, as far as what would be the best fit, in my opinion.
Well, it's interesting. I'm going to ask you the question with regards to the ETF version versus buying the actual gold. And this is a tax question. And if you want to avoid it, that's okay. But it always makes me think, because I'm very tax savvy, is if I bought a ETF that tracks gold, and I actually just looked at the chart right before, and it literally tracks it. You said I don't actually own the asset, but fine. So if I bought $1,000 of the ETF and sold it for $3,000, I have a capital gain. But if I bought $1,000 of a gold bullion and walked down the street and sold it to the local store that buys and sells gold for $3,000, who's going to know?
Yeah. Okay. So I am not a tax professional, so please, confer with your tax professional over any tax-related questions. And I am in no way encouraging people to defraud the government or not pay their taxes or anything. That being said, you are correct about the privacy. Let's just call it privacy. So when you acquire physical metals through a company like ours, number one, when you acquire it, there's no 1099. We're not required to submit a 1099 on that. So, it's like buying a couch from your neighbor. And the same with the liquidation. When you liquidate the metal, which you can do, our company actually guarantees it. Well, any metal we sell, we'll always buy back. Then same thing. It's literally like selling a couch to your neighbor. So we're not required to submit a 1099. So you're completely correct. But again, you know what I'm saying.
Yes, no, I get it. So I really didn't want to go down that path, but it kind of just made me think about it at the moment. But, and you referenced that the ETF is not actual holder of gold, because if I held the ETF and I wanted the actual gold, I can't use it. And I even heard that if all of the ETFs combined were traded in, there's not enough gold to cover it. So all it is really is a paper, how much it's worth.
Man, you gave me a perfect jumping off point to kind of really hammer this down. So when you're talking about gold and silver, there's what's known as the spot price. All right. And that's the price that you just looked at this morning. Okay. So you have the spot price of gold, the spot price of silver. Now, what the spot price is, it's a futures contract. So it's actually traded on the COMEX exchange in Chicago. And it's supposed to be represented 1-to-1 by physical bullion. So when you buy a contract, I believe gold, it's 1,000 ounces for one contract. Then you actually have that 1,000 ounces of bullion. Now that is ultimately what the spot price is, and so that's what you see. Now, when you buy physical metal, that's going to be a market price. So depending on what the supply of that metal is and the demand for that metal, that's going to dictate what that metal is actually worth. So the spot price is like your benchmark, and think of it like real estate. Spot price is land value, and then the physical metal is like the actual property, the house with the pool and whatever it is. So, there's a market for American Eagles. There's a market for Maple Leafs. There's a market for bars. And so you're going to see some differences there, whereas that spot price is just going to stay, just consistent. It's, it's just like a stock price, is that type thing.
Do you see much variability between the market price and the spot price?
Absolutely. Yeah.
Really?
And this is what I was referencing earlier when I said how silver got so out of whack with its ratio. Okay. So this allows me to kind of put some more color on that statement. So think about it. So the spot price of silver are these silver contracts. Spot price of gold are these gold contracts. Now, me and you as retail investors, we're not going to be buying these because they're 1,000 ounces per contract. So with gold, I mean that's millions of dollars. And so they're trading on an institutional level. And when that trade settles, okay, they have a choice. You can settle it for the cash, the cash value, or you can actually take possession of the metal. And that's what I was saying with silver. JP Morgan knows damn well that nobody's going to take possession of $300 million in silver. It would take up freaking 7 city blocks. You know what I mean? That's a ton of silver. And so they know that with a ton of certainty. And so they're able to, what's known as a naked contract, meaning that it's not necessarily backed by the metal. Now, if you're thinking that sounds illegal, it is. And actually the president of precious metals trading is in a prison cell right now for JP Morgan, ex-president, I guess. And for just doing that, for literally racketeering, RICO charges actually, because he was doing that. Now that's why the spot price stays where it is. And that's why the physical price can do its own thing. And so, for example, there was a silver incident when SVB Bank collapsed where the price of silver, the spot price was $26. And if you bought a 1 ounce silver eagle, you could liquidate that for $38. So we're talking like almost double spot. Yeah.
Right.
So again, like the physical market used to behave almost formulaically with spot. And now we just more use spot as a benchmark. And then the physical market does its thing depending on supply and demand.
So I just looked at the spot price of gold when I looked it up on Yahoo Finance. Okay, it's right there, right? It was 3,300. What is the market price of gold right now relative to that 3,300?
Sure. So again, so going back to the analogy of real estate. So you have your raw land value, is whatever. Okay. So what is the market price? Well, it depends on the property, right? Are you getting that 2-story house with a pool, or are you getting the fixer upper? And with metals, again, there's not that much diversity, but still the analogy holds true in the case of there's a market price for an eagle. All right. So the American Eagle, that's the United States Mint. They produce gold and silver for investment. And that's going to be roughly about like $100, $120 above spot. All right. So that's going to be your market price. Now, there's also a market price for a bar. Now, a bar, there's not much to it. There's private manufacturers. You see those cash for gold places. They just smelt it down. They put it in a mold, stamp it, and then sell it. So that's going to be more like, $20, $30 over spot. So again, depending on the asset, it's going to, dictate what that market price is.
Okay. So you actually brought up a very important question I say question, but you referenced the eagle, and having 40 years ago was involved I was a coin dealer. Okay. And we talked about it. So I'm 8 years old and I'm wheeling and dealing with coins and buying and selling. And I remember that was the time, I think it was the Hunt brothers with silver. Okay. But throw that away for a moment. There's a numismatic value and then there's a gold value. And so me personally, if I'm buying gold, if I can buy the numismatic value is only a fraction higher than the bullion value, it may be worth buying it. But if the numismatic value is substantially higher, there's risk because that's where you have volatility because it's only, and here's an example that I can use. A client of mine a number of years ago, his father had this stamp collection that he had a couple stamps in the Smithsonian. And after he died, he took the stamp collection to somebody and said, "Hey, what's this worth?" He says, "Oh, it's a beautiful stamp collection. It's worth zero." Like, zero? What do you mean? He says, because nobody wants to buy it. So at least a coin has its value, but the numismatic value, for instance, I own a penny that's worth $500. It's actually worth probably way more than that. But how much is it really worth? 1 cent. Okay. The rest of it is numismatic value. That's what concerns me about buying gold that's an eagle or buying the old gold coins, because their value is numismatic value, which is the coin value. What's your thoughts on that?
As you can see, I was chomping at the bit. Those are excellent points. Excellent. You listen. My thoughts on it are this. Okay, numismatic value. It is definitely a thing. I mean, it's not like a fantasy, but like you stated very articulately. It's really what the buyer will pay for it. So you could say, oh, look at this very rare 1920 1-ounce gold piece, and it's worth $130,000. But guess what? I need to find a buyer that wants that very rare 1920 perfect condition gold piece, right? Now, if I'm buying gold eagles, that is just the gold and the credibility of the United States Mint, and, knowing that, hey, like the U.S. Mint produced that 1 ounce of gold. So that's 100% liquid. I don't need to find that buyer and go to Sotheby's and, auction house or something. I go down to a pawn shop and sell that eagle in 2 minutes, So we're talking like massive liquidity. Now, you said something very smart, which is, yeah, if the numismatic value is not going to affect the price you're paying for that gold that much, then I think it's a bargain, because you could get that little extra sweetener on the end of it. But see, the problem is that unless you're I think it's a numitist, I don't even know how to pronounce the word, but unless you really understand that market, then, hey, you're investing in variables that have nothing to do with the actual physical value of gold and the things that we just talked about, what drives gold prices. And that's where people, have these horror stories where they invest 500,000 in gold and it's worth 100,000 or something. That's what happens. They've invested in these quote unquote numismatic coins that some dealer, sold them with the best things since sliced bread. And it's really just, no, it's gold and there's no real market for that, But so again, the numismatic value, and here's a good analogy to kind of end with. So let's think of watches. So you have if you just want to watch your Casio, right? And that just tells time. Okay. Then you have your Rolex, right? Now there's a scarcity to Rolexes because everything is handcrafted, premium materials. And then you have the watch that George Washington wore when he cut down the cherry tree, right? Now that's your numismatic coins. That's going to be your high demand bullion. And then that's going to be like your bars. All right. So you have your bars. All right, great. It's going to serve the purpose. It's just a bar. And then you have your higher demand bullion, like an eagle, where the United States government's behind it, or the Maple Leaf, or the Canadian government's behind it. So there's a heightened demand, and there's a bit more of a scarcity because of that. And then you have the watch that George Washington wore when he's cutting down the cherry tree, and that's what you were referencing, your $500 penny, or what I was referencing, the 1920 gold piece. So that's something where, yeah, it has a value, but you're going to find a collector that's going to pay for that value, and whereas the others, you don't.
Perfect. You know what? We're actually at the end of an episode, and I think what we're going to do is we'll do another one, and we'll pick up on a little bit of this numismatic versus the different types of gold, because I'm very interested in that, and I'm sure that the other ones are, because you referenced the high demand bullion versus the bar. I always thought bullion in my mind was just the bar. So, Brandon, this has been terrific so far. We're going to pick up on this again. So for the viewers, thank you very much for joining us. And we'll be back with you in the next episode of Financial Plan and Explained. Thank you. Thank you for watching this episode of Financial Plan and Explained. We strive to provide an educational experience for all of our viewers, and what we struggle with at times is topics. So if there's an idea or a topic that you would like for us to discuss on a future episode, please email us at admin@maaplanning.com, or you may enter it on the Contact Us page on our website at www.maaplanning.com. Thank you in advance for participating and helping make our show successful.